Today's hot news, mortgage rates are soaring. Oh boy, more on that in a minute. Hi everybody, Joe Hillner with your Home Sold Guaranteed Realty, where we will sell your home for just a 1% commission guaranteed. Every week I share market data to keep you informed with the local real estate market. Here's this week's Boca Market Watch. First up, single family homes. This past week, 43 new listings, pretty decent, ranging in price from $309,000 to $7.9 million. 16 homes back on the market, while 9 homes listed took a price decrease and 7 sellers raised their asking price. And another so-so week with 36 different properties under contract and 44 going pending. Only 11 homes unsuccessful in selling and taken off the market or expired outright. And kind of a poor week for sales with just 44 homes closed in the past week, ranging from $415,000 to $17.5 million. Just a few blocks down the street from me. No, I don't live in that kind of a home. Next up, condos and townhomes. 51 new listings, not great, ranging in price from $88,000 to $2.8 million. 24 units back on the market, 17 with a price decrease, and 11 sellers increased their price. And a decent week with 42 different properties under contract and another 48 going pending. And only 14 condos or townhomes unsuccessful in selling and taken off the market or expired. 69 closed sales this week, not bad, ranging in price from $75,000 to a cool $6 million. And here's what's making news right now. How the heck did mortgage rates soar past the 4% mark last week when many forecasters weren't expecting that to happen until later this year or even next year? Many economists had expected that some factors driving inflation during the pandemic, such as supply chain disruptions, would be transitory. The prospect of more severe Fed tightening has spooked the bond market investors, pushing rates for conforming 30-year fixed-rate mortgages above 4% for the first time since December 2019. But bond market investors make decisions based on their expectations of what Fed Reserve policymakers will do in the future. And it's looking like the Fed's going to be more aggressive about short-term interest rate hikes and shrinking its balance sheet. But these moves will be data dependent, so if inflation numbers ease, mortgage rates and other long-term interest rates could plateau or even come back down. What's interesting is that even though conventional and FHA rates are just over 4%, jumbo loans are seeing rates in the 3.7% range. That's highly unusual, but good news for anyone looking for a larger loan amount. Fed policymakers have been telegraphing their intention to raise the short-term federal funds rate 6 times this year, 1/4 of a percentage point at a time. That's double what we were forecasting late last year. But bond investors were startled Thursday by U.S. Department of Labor report showing the Consumer Price Index rose 7.5% in January, the largest annual increase since 1982, 40 years. After that report came out, St. Louis Fed Chair James Bullard fueled investor concerns, telling Bloomberg that he would support raising the federal funds rate by a full percentage point during the first half of the year. Oh my goodness. We haven't seen that kind of aggressive monetary policy in decades. And as I reported last week, there's a realistic chance that could tip the economy over into a recession. Fannie Mae's latest national housing survey showed the percentage of Americans who think it's a good time to buy a home fell to an all-time low in January, with rising home prices and interest rates making homes unaffordable for many would-be home buyers. In their most recent forecast, Fannie Mae economists predicted that many home buyers will be priced out of the market this year, and that sales of existing homes will fall by 3.2%. But rising rates could also supercharge the housing market ahead of the spring selling season, as the fear of missing out on low rates could get some buyers off the fence. To put it in perspective, with rates at 4%, home buyers already have $52,000 less house buying power than they did back in November. Wow. Fannie Mae and Freddie Mac's federal regulator is requiring them to implement new fees on second home and investor loans. That means a growing number of home buyers may find that it's cheaper to do business with private lenders who fund loans without Fannie and Freddie's backing. For example, We now have a product for investors that requires almost no documentation. The loan is quickly approved just on the basis of the rental income in relation to the debt service. Very creative financing. Since rates will vary by lender and the borrower's credit score and loan-to-value ratio, it's smart to get quotes from multiple lenders. So if you're thinking about making a purchase, just give us a call and we'll connect you with a great local mortgage bank right here in Boca. And you can shop away to your heart's content. Okay, that's it for today. If you'd like some specific market data on your neighborhood, just give us a call at 954-799-6867. If you're watching this on my YouTube channel, and you like the information, please don't forget to hit the like and subscribe buttons down below. Till next time, this is Joe Hillner with Your Home Sold Guaranteed Realty, signing off for now. Go serve big, everybody, and be nice to each other. See you next week.